Hello everyone, this is Evan here from the Trade Risk on Friday, May 13th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Before we jump into the video, I just want to thank everyone for those of you who did subscribe to the YouTube channel here. I was asking for it in the past videos, and I got a good number of subscribers there, so I want to thank you. If you haven't already, please do subscribe there. Keeps the channel growing, keeps me know that you're interested in it, and keeps all these videos free. So I do appreciate the support and the comments that I've gotten back on these videos. So jumping into the S&P 500, we had a nice little start to the week. We had this nice uptick here, and then everything sort of just slid down, and we closed on the lows. We lost 87 basis points, almost 1% here just on Friday. Let's look at the weekly chart before we look at that daily chart. You can see we ended up closing down for the third week in a row, down just about 0.5%. And it wasn't quite an inside week because we did kind of peak up and break above last week's last week's highs just very briefly. And then, of course, those failed. We closed on the lows, but we didn't take out last week's lows. So we still have this very important support level right underneath us at 204 in the S&P 500. This is exactly where we bounced last week on Friday. And then we saw that initial bounce take us up higher for 2 days. And then Wednesday, Thursday, Friday, we gave it all back, and we're quickly coming back into this area. So about 5 days in between a second retest coming in, and then of course this is where support held back here in April. We've been talking about this for quite a bit here, and it's because it is a very important area for the S&P 500 right now. There's a lot of ground to sort of at stake here potentially if we break below this support level. Now, a couple of things to note. I put out a blog post earlier today on the trade risk. You can read it, taking a closer look at the McClellan oscillator, which has been weak. We'll talk about that real briefly in a moment. And I also talked about this potential head and shoulders pattern that's set up here on the S&P 500. It's also set up on the IWM. I'm sure I'm not the first person to point this out. I think this is a very straightforward sort of apparent talked about pattern right now. And the issue I have with that is because it is so looked at, because everyone seems to know that this is here and we're all sort of, bracing for impact, that can play a lot of tricks when you have the majority here thinking, well, this is probably going to break down, I should step aside right now. So keep that in the back of your mind. This is a potentially has bearish implications, head and shoulders, classical topping patterns. We know what happens. You can take the measured move from the top of the head here down to the neckline and project a move, which comes down to, right around 198, I believe, or so. That's traditionally what happens, but you have a lot of sometimes false breakdowns and then reversals of head and shoulders. They can turn into continuation patterns, so just be aware of it. Don't think of things as a vacuum. Just because you see this pattern here that can be potentially bearish does not mean it has to happen. Now, I did talk about the McClellan oscillator, the internals, some of those things that I look at to sort of confirm what I'm seeing in the price action. And I am seeing a bearish sort of tilt there, giving me that bearish bias in other places. So yes, I am bearishly biased, but I am still always going to keep an open mind and keep reassessing as the days continue and as this price action unfolds. So that's sort of the way I'm looking at this. I have been bearish, basically been writing about the bear side for the past, since early last week, particularly Tuesdays when I got more vocal about it. And if you go to the traderisk.com, you can see a series of posts that have all been on the bearish side as far as personal leaning. But again, always got to keep an open mind. I think before you get too rushed into the bear side, you have to realize this is still just a trading range that we are in. And this trading range is in the context of a uptrend that we have been in for the past 3 months or so, all the way down from these February lows. So we started at 180, came all the way up to 210. That's almost 30 points of an increase in the S&P, in the SPY ETF, and now we are just carving out a range in the top 7 points of that almost 30-point range. So you just have to realize we're still in a trading range. We haven't got that bear trigger yet. We haven't got that big retracement. We're seeing signs of softening up here, though. That's sort of probably the most objective way you can look at this, and you just want to stay kind of alert and open-minded as to what will happen next. For us, we've been playing things. We've tried to keep things pretty light recently. We've had long positions on. We've had some short positions on. We were long volatility coming into today. That's VXX, or actually UVXY is what we are in. We were long that coming into today. That helped, although we did have long positions. That got beat up today as well, so we did drop some long positions. We're probably more net short now. In fact, we are more net short, but we have longs and shorts on, and we're just playing it very tactically and very light. We don't have a lot of exposure. We want to dial things back when we're in these sort of messy, sort of indecisive ranges. Let's look at the IWM. Similar comments here. You can see you got the tracing here of head and shoulders pattern that could trigger. Again, it might be a little obvious to some. Maybe it won't happen like we all expect it to. Maybe it just has, maybe we get one big bounce and then we get some complex right shoulder here and then we roll over. Again, just keep an open mind, but similar comments do apply here for the IWM. And then the Qs, a completely different pattern. Let me get this line off. Completely different pattern. You can see, of course, we had a bigger retracement here already take place through most of the month of April, and then we're just kind of hanging out here above still. Friday's low is a bit higher. They did outperform relatively today, the Qs that is, compared to the IWM and the S&P 500. So that's interesting. Slight mild outperformance there towards the end of this week. We'll have to see if it can hold up, though. Again, critical level will be last Friday's lows right here. So I think that pretty much sums up everything on the broad market. Let's look at some other markets. TLT, we've talked about this, nice and bullish, starting to poke through the top end of this range here. Tough to chase given this is such strong resistance, but this is the highest weekly close going all the way back to Friday on January 30th, 2015. Took a lot to get that out there just because it has been such a long time, but this is the highest weekly close since that date. That's impressive. Keep an eye on this. Again, we've discussed how this broad pattern here on the weekly and monthly time frame look really strong for TLT. Let's look at gold. Go back to a daily chart. You can see still kind of carving things out here. You had the highs back in here put in from March after this nice strong run up in February. Still consolidating sideways. I got to clean some of these lines up, but you can see it's basically just in a holding pattern here. Looks like it wants to go. It's staying pent up. Hasn't lost the 20-period EMA, a little bit briefly in here, but keep an eye on this. Still looks pretty strong. Still could probably run. Silver, similar situation. Still holding a high-level base here, reversed at the lower end of this range, where just exactly where you'd want to see buyers step up. That's where they stepped up. So silver still looks encouraging. Give this maybe more time to move sideways, and hopefully that one can continue. Let's look at USO. Bullish pattern here as well. You can see stubbornly staying high up here, right around this 1150 level. Talked about this level being resistance back here in late 2015, early 2016. And that still seems to have a hold on price, not letting it continue further, but it's been marching higher still. USO, I think if it can get above this week's highs, above 1150, it certainly has room to float. There's a gap over here. Maybe that wants to get filled from early December of 2015. So USO still looks good. UNG, breaking my heart today on Friday. This one, we're still long UNG. We're giving this a little bit more. You can see it's still being contained in here. It's compressing nicely. It's been in this tight range for a few months now. So let's see how this resolves. We're long it, but the stop is not too much further lower than where price is right now. And then UUP is getting back in here, almost looking like a nice false breakdown. And especially on a monthly chart, you can see here as it broke down through this lower range, you can see almost you could get some type of bullish engulfing for the month of May if we do see continuation higher above 2475 or so. So keep an eye on that. UUP getting that strong bounce back. Let's see if it continues heading into next week. Now, looking at some sector analysis, XLU, this is still where a lot of the action is. Again, back to the boring names, utilities. they're starting to perform again. IYR also performing pretty well, came off a little bit from the highs, but still, all things considered, holding the 20-period EMA, 8-period, 20-period, still in bullish alignment. So still like the IYR, and to a lesser extent, XLE I'll put in here as my top 3. Again, still maybe a little more vulnerable, certainly more than the last two, but looks decent. Of course, this is tied closely and hinged on oil, so keep an eye on both of those if you're looking at XLE. Now, if you look at some of the laggards, it's pretty much everything else, especially after the past 3 days. Everything started to unwind. The IYT Dow Jones Transportation Average, we don't talk about this one much, and it's probably because I don't chart this one enough, and I probably should, but certainly rolling over here pretty hard for the strong Dow theorists here. This is an issue. Took out the lows back from last Friday, and it's leading on the way down. That might be concerning to some. XLI industrials right back to past Friday's lows, but this is looking sort of vulnerable here as it comes crashing back down on support. Discretionary taking out last Friday's lows. Home builders, some of these individual names really taken out to the woodshed today on Friday, but you can see coming back down to this big support level. So really, not a whole lot. XLP got hit on Friday, so a lot of these sectors at least look vulnerable. If not, they're coming back down to support, and we need to see what's going to happen with a lot of them. Let's look at some individual names. Apple broke some important support this week below $93. This is where we found support back here earlier in 2016. This was also the flash crash lows from 2015. Price hasn't been this low since mid-2014 in Apple. If you go to the weekly time frame, you can better see lower lows and lower highs in the process here on the weekly chart. Very clean, very orderly, and you need to be concerned here as we just broke support. Fresh support here, and the weekly time frame here looks a little vulnerable. I would not want to be trying to get long this. If you want to get long this, I would much prefer that you wait for a recovery of 93.50. If we can somehow turn this into a false breakdown, and get back above some of this resistance, let these moving averages catch up, get back above here, I would, then you have a well-defined risk to reward. If you want to own Apple, then you can trade right against the lows here from the false breakdown. Otherwise, I think you need to be careful. You can short it for sure. Momentum is to the downside. That's the way I'd be looking at Apple right now. Netflix, also another one that looks concerning, took out last week's lows. Again, when we're looking at those indices, a lot of names and a lot of those indices were holding last week's lows. We were above last Friday's lows. Netflix is one that is below last Friday's lows. That is concerning. You can see on the weekly time frame, more of just a messy trading range that this has been in. Certainly a big mark down here, right around $80. This was the pivot from earlier in 2016. Probably want to go back down there and retest that to see if it's still support. In Netflix, got to be careful there. Again, not one I would want to be jumping in on the bull side just yet. Tesla looking also very vulnerable. This had its slide lower from running up, leading up to its earnings release, and then as the earnings came out, it didn't do a whole lot. So you can see it's very weakly hanging in here, and these lows right around 205 are making this susceptible for more momentum to the downside. Another one that you bears might want to jump on board of because it does look vulnerable for lower prices. Let's talk about something differently on the upside. Facebook looking strong still. Didn't manage to hold gains today, but still holding above the 8-period EMA. It still had an inside day and held above yesterday's lows. That's constructive. Facebook's still showing relative strength, one of the best out there. The only one that's probably outmatching it is Amazon, although this one was a little bit weaker here on Friday and took out Thursday's lows, but still just been a monster recently. Certainly deserves to come back in here and rest some if it needs to. The breakout from 680 or so is basically where you'd want to see this hold for you bulls, and if you're interested in getting in this name, you should be watching this closely. I'm watching it closely because I think any pullbacks right now are going to be a gift in Amazon, so keep it it on your watch list. And then finally, let's look at Twitter. Back to the bear side, also looking very vulnerable here at all-time lows, just basing out, looking pretty heavy. Particularly yesterday, Thursday, was when we really saw that push back down to the bottom end of this range. Friday, we managed to hold on to this level, but really below $14 and taking out this little pivot low here at $13.91, which is the all-time low print in Twitter. That's where you're going to be looking for a new fresh breakdown. And I know on earnings, I was watching this on earnings. I believe it was this earnings release here. We did trade. I think we even traded 12 handle on earnings post market. I'm not sure. I'd have to look back, but I know there was some trading that took place there after hours on that last earnings release. So perhaps that's an ultimate target retest level that the market wants to get to. And that's it. That's all I have for today on this weekly recap. I hope everybody had a great trading week. As always, thank you for watching, and I will catch you guys next time.